The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Get this going on. And welcome all to another exciting episode of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, once more into the breach, dear friends. And that is where we are at. Let's get started here. Of course, so every day we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And as I come to you, we're up a whopping 1.2 points. And as I've said over the last few days, we've gone 100% cash in all our accounts, both the long term and the short term. And I'm more than willing to sit on my hands until we get some kind of signal out of this market. I'm getting less signals than just about any that we've had probably this year. A lot of times you can see it's coming. We've got a market that is back in the doldrums, almost at the exact levels, at least in the S&P, that we were looking at before the British exit. But you know what? We'll talk a great deal more about that. Huge storm clouds on the horizon. And I'm not just talking about the weather in Tampa, although we do have storms that go about halfway to Texas. But what we do have is some Dark Shadows. You remember that show? Man, I remember that show. Anyway, Dark Shadows, we'll talk about that in the snooze today. And let's get this party started.
That it's all just a little bit of history repeating.
And we've got everything just moving along out here. Like I said, not a lot of volume. It's okay. But 2.2 billion shares is not enough to blow out the highs. Also, if we went lower, not enough to blow out the lows. So we are kind of stuck on a sandbar. Oh, that's a good song. I hadn't thought about that one. I'll look up the lyrics. But a good Jimmy Buffett song, Stuck on a Sandbar. I'll have to remember. I'll have to look it up during the break. Anyway, up a whopping 1 point. And guess what? Just, Mr. Barnabas Collins. Ooh, I like that show. Andy's in the house today. And, of course, he will be on at 5 o'clock. Following this hour, we have Professor Rhodes, fresh off his Rhodes Scholarship Tour. Very interesting show today. As always, you can get all the programming on TFNN, live or archived. But very interesting discussions today from the beginning of the day when we started talking about finance at 8 a.m. in the morning. And even before then, when we talk about those miracle molecules at 7 a.m., if you're up at that time. What else do we have going on at the day? Well, we just need to get into a little bit of history. Did we already do history? Oh, I got windows popping up. Got all kinds of stuff going up. Let's do history again if I forgot it.
That it's all just a little bit of history repeating.
On this day in 1790, Congress enacts Alexander Hamilton's plan to fund the public debt, ending years of turmoil and haggling over the junk bonds issued by federal and state governments during the Revolution, making a government spending possible, giving birth to the American securities market and the biggest bull market ever in history, the bond market that's been in progress for over 30 years. Yes, those miracle molecules with coffee. Ooh. What else do we got going on out here? After the bell, Air Methods, Bankrate, one of the several failed IPOs are coming back. Some of those have been bouncing on just too high short interest. Loco, EOG Resources. I need to fix that. It's going to bug me here now. What is that? El Poco Loco Holdings? I don't think so. We'll get it fixed here. I don't know why. Something's going on here. Everything seems to be, there we go. Easy Corp, Juno Therapeutics, LinkedIn Corporation, New Skin, Post Holdings, Taser, Weight Watchers. And if you noticed, Weight Watchers are all the way back to where it took off when old Oprah jumped on the thing. Wingstop, Zillow Group, and Zynga. So we're going to get a little read tonight, but I think today we got the most important earnings of the earnings season. Yes, folks, what did we have? If you will go back and turn back the Wayback Machine, I was telling you that what we were looking for in this market to signal huge problems with the U.S. stock market was one thing. Do you remember what it was, class? Class. You can put your hands up. Anybody? Bueller? Bueller? It was, of course, the insurance companies. No, everybody failed. It was the insurance companies. If you look at them today, Prudential and Met and the rest are getting slaughtered. We'll look at charts of them in a little bit. But that's exactly, if you remember what the stocks that got hammered the worst were when the British exit vote came out. Was it the financials, or was it even worse? Was it on a percentage basis? Was it those insurance companies over there in Europe that we're getting hammered today in the insurance sector? Tells you just about everything you need to know. That they had a very bad quarter. My guess is that that quarter will not get any better. We may have a Fed that is, as fast as they can, taking a bucket of water from the deep end of the pool and pouring it into the shallow end of the pool, trying to make everybody think that that is doing something. Maybe they've got enough cash to just throw it at the market every day to make sure it goes nowhere between now and the election date. But eventually, the big game will be up, the music will stop, and someone will be left without the chair. And it's not nice to be without the chair. Just ask anybody. No one wants to be that person that didn't have a chair when the music stopped. Prudential had an earnings of $1.84 a share, way short of their $2.50. So no one was actually even looking for this. When you look at Met, what are these things off right now? Let's take a look. Let me update this so I can get a current quote for you. Met's off 9.5%. Prudential's off 4.5%. There was another one. I can't even remember it right now that I saw earlier. Ooh, little dark shadows here going into the break. As I said, dark shadows. We've got Mr. Artemis Collins out there in the wings. I guess when I was 10 years old, this was scary. Probably just look hokey today, wouldn't it? We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, we want to take a look at some of these companies. You know, Hartford already fell apart a few days ago. I've been waiting for a few more of these. AIG, as Z in the Den said, probably not so much. But these two out here acting so horribly today makes me think that the beginning of the end. AIG is probably a little bit different of a particular insurance company. I think that's why it's probably going to be at least better than the rest. These are the typical ones, though, Hartford and HIG and Prudential. But big move down. And what else do we have out here? Prudential. Let's take a look at that one real quick. But if you looked at the stocks, especially in Europe, before ever the wheels fell off the wagon over there, it was all about the insurance companies. Many people in the den commenting about the zero interest rate and whether or not you can do anything. I think you can make a very, very, very compelling case that you've got ABC downs in some of these, like Prudential and Met. We'll take a look at them here. A little bit more than a retrace than I would like, but basically did exactly what these things should have done, which is come right back up to where these big gap downs were that were all about the British exit, the British invasion. Let's see, do I have it here? Let's call that one our A point. Let's call this one our B point. And let's call this one our C point. I know it's a little bit bigger, but I am saying that this thing just kind of came back up this way. Did a 71% retrace on it. So a little bit more than you would like. But you know, a lot of shorts out there push this market just a little bit farther than you would think. Let's take a look at Met. That would put you at $62.53 on Prudential. On Met, What do we have on this one here? What is that? $47. Okay, let's make that one our A. And let's make that our B. And let's make this our C from yesterday. Okay, so this one retraced almost the same, 70% on this one. A one-to-one ABC on this now takes you to $32.92. I don't see anything that stands in the way of this. You've got, when's the election? November 2nd. So you've got, or 5th, whatever it is. So you got pretty much everything that you want. That is, the Fed is not going to raise anything between now and then. These things probably will just wither on the vine. Plenty of volume on any of these. Yeah, $32.92 takes you back, doesn't it? On a ways, but you got all the volume you want today. At least you're going to get $36 out of this, maybe $35. That's just if it tests the February 11th low or the higher volume low from June 27th. And this is probably more indicative than anything else. There weren't a lot of signals coming into this market. In fact, probably less signals than we've had, like I said at the top of the show, in a long time. So I don't know what else to say out here other than, this is what you should be paying attention to. The big funds probably won't be able to stay in these things. They'll start selling. And of course, guess what? Who owns more stock than anybody else in the world? Insurance companies. When they're under the pressure, they have to start selling shares. And these are the ones, maybe it's a one-day wonder, but these are the ones that are going to be able to put the foot on the accelerator pedal on the way down and make more people sell. And we may have a pretty balanced market today. We made it through fund buying without going up. That kind of signals that we've got some kind of homeostasis. And no, that isn't some kind of weird thing. This means that everything is balanced for you people in Lutz. $21.62. We're off 1 point in the S&P cash, but there's no volume up, no volume down. And we've gone right back to it. Can you make a case that the market is rigged at the point by the Treasury and the Fed? A little bit. But the more they try to hold it, the more steam will build up for a move. Even the move today with the dollar up 20 cents, is just enough to keep this market from moving anywhere. But again, let's talk about a stock that is basically flat today. I wanted to talk about these insurance companies first of all, because they are, for the most part, giving horrible warning signals. Tesla is another stock. A lot of people asking what's going on in this and how a stock can report a quarter like they have and still figure out that, there's, I don't know what they want to say, just how can it happen like this? And my answer is 25% short interest. That is, this stock is horrible. Everybody knows it's horrible, except those folks that are in the cult with it. And we talked about this maybe 2 weeks or 4 weeks ago, that if you want to really understand cult mentality, Apple was a little bit of it, but they had a company making a profit. There wasn't a whole lot of guessing about how they made their profit or the numbers on it. A lot of people were cultish about it, but they were also realistic. Tesla comes so much more close to Omega in the 96, 98 range. Really was, if the commentators on CNBC said one word about it wrong, they'd have to wade through their inbox and their email for a month to get the hate mail out of it. My guess is that exactly the same thing happening here. Listen to an interview from the Fisker guy who designed the Fisker electric vehicle. Very interesting stuff. He talked about the demise of his company, which I'm going to say I've ridden in both the Tesla and the Fisker. I think the Fisker is a better car. I thought it was, for the price point, much more luxurious. I think it was better designed. Of course, he's the same guy that built and designed the Aston Martin DB9. So you got to give him a little bit there. But of course, that company's been bought by a Chinese company and might come out. But a very interesting discussion about him saying that the battery, or he had a run of batteries that were bad, and that sank the company. He probably would have been in the same boat that Tesla was today if it wasn't for the bad run of batteries. That may give you a little clue as to why Tesla is so into this mega factory where he can control the quality of his batteries. Maybe he's seen the Fisker writing on the wall. A very interesting interview from him, though. We'll talk more about Tesla when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I had some email during the break, wanted to ask me why I thought maybe some insurers were different than others. Somebody in the den brought up Berkshire Hathaway. They own a bunch of insurance companies down here in Florida. And one of the things they did was sponsor a senator who was also the insurance commissioner for the state. And of course, they gave him a whale of a ton of money so he could become senator. And of course, on the way out, he gave them a bunch of sweetheart deals so that Berkshire Hathaway and its insurance company surrogates could rape the premium insurers of Florida. A lot of different ways that they did that. One of them was to be that you didn't charge just on zip code anymore. The insurance here in Tampa used to be very low because we haven't been hit since 1918 with a hurricane. And even then it was tidal surge. It wasn't even a hurricane. The way the landmass moves here. So what it meant was that a lot of folks all over the state end up paying for Miami, who gets hit about as often as the redheaded stepchild. And, you know, what else can you say about it? They've also had absolutely one of the best runs ever, i.e., what has it been, 1,300 days, 1,500 days since a major hurricane in the Gulf? Of course, that is what's going to affect Berkshire Hathaway because they own everything down here in Florida. They have their finger in all the little pies. So, you know, will insurance actually hurt them? You know, they've got a lot of holdings that are behind those. But again, what happens? Berkshire Hathaway, the money that comes in from their insurance companies, guess what? Goes into the companies they buy. And if you can buy up an entire company, what's the chance of that price going down? I mean, if Berkshire Hathaway buys IBM and then uses all the insurance money out there to buy its own stocks over again, eventually Berkshire Hathaway just literally owns through its surrogates or the companies they have also. So, like I said, there's not all insurance companies are the same, but the classic insurance like IAG or Prudential that bought baskets of stocks that's not actively invested in manipulating the stock prices of those stocks. They don't, you know, they've got plenty of stock, but they're not out there manipulating it like Berkshire Hathaway and our wonderful friend, Mr. Buffett. So, you know, AIG, I think you can make a claim that there's a lot more to it than them. I'm just not as familiar with being gouged by AIG other than others. Yeah, Nelson. Yeah. Nelson, he was a rather pathetic weasel. I think he's still a senator down here. And they gave him a ride on the space shuttle to buy him off for something else. But we've got the best of government that money can buy. And ride on the space shuttle into space, probably worth $1 million, isn't it? Maybe a couple more. You know, a lot of times that's been the payoff. Can't do that anymore, though, really. Anyway, we were talking about Tesla. I'll get back to that. Circling around back to Tesla out here. As I've said, this is a $40 stock, the way I look at it. And if you held it 10 years, would it be worth $220, $240? Maybe. But again, you're paying up front for what everybody else believes. I know somebody in the den is in Reno, Nevada. A lot of discussions about whether or not Tesla will be able to use the lithium in some of the dry lake beds out there. But you have to remember that most people in companies like to underpromise and overdeliver. Tesla is just the opposite of that. He promises all kinds of stuff. As far as I can tell, in the last 2 years, I went through the projections. He's missed every one. Does that mean the stock should go down? No. It should be that you take whatever he says with a grain of salt, or an entire salt block, or an entire salt flat. I think the answer is yes. But he's pushing a lot of stuff. Of course, that factory should have been done, according to him, over 3 months ago. It's opening up with about 1/8 the capability. I think they had a rollout last week. So I continue to look at this. Now, to me, it's got to hit this 240 level before I consider shorting it. And again, what I would like is to see a lot of shorts get out of it it's incredibly tough to make money in a company that is perpetually 25% of the shares are short. And that makes it an incredibly dangerous company. And of course, all those shorts are all just waiting for the day this thing falls down. The best shorts in the market are short this stock. They're more than willing to let this thing go sideways for a year, year and a half. We as individual traders cannot do that. But from the folks from Citron to the folks at Chanos Associates, it's not Chanos, what's something else? It's a Greek name. I forget it right at the moment. But Mr. Chanos is short this. Very, very tough. And of course, when you actually look at the way that Solar City actually performed, even into earnings, it can't hold up. A lot of people are very dubious about this. To me, it would make Tesla probably a lot weaker out here. The reason that they're buying Solar City is, of course, that they can use their shares to back up some of the loans that Solar City can't get anymore, because Jim Chanos basically showed them as the king that had no clothes on. And it's tough. It's very tough to buck dollars and cents and earnings statements and all the other stuff that these short guys put up, especially when they're continually right. It doesn't do them a lot of good to be a Herbalife and do a 350-page statement. Basically, they just have to say, I think it's going lower. Don't jump up and down. Don't get a 50% short in the stock. You know, I think Chanos has got 4% of the shares, shares of Tesla short. But just say, hey, I think this is what's happening. If the facts change, I'll be more than glad to cover my shorts. But guess what? He has not as of yet out here. But this is a, as they say, a teachable moment in shorting stocks, and that is it can be the worst stock in the world, like iOmega. It can be a PE of 400. I think it was 450 at one point for iOmega, if I remember right. And I'm thinking, coming into this, I'm thinking, how can this say 450? I'm going to give you $450, and you're going to give me $451 back. I didn't understand the math of that then. I don't understand it now. Of course, the Motley Fool guys were out there beating the drum. This was before the Kramers of the world had their own TV show every day to cause these kind of things to happen. But you know, they still happen. As I said, we'll look at a bunch of other stocks out here. We'll get into high gear and cover these before the end of the day. We'll look forward to the 3 o'clock hour with Professor Rhodes today for the vacationing Tom O'Brien, and be back after this very short, did I say short? Commercial timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Had a request in the den to take a look at IBB. You needed 4.4 million shares to tie the April 22nd high at 289.71. Yesterday we had 2 million shares today, 700,000 shares today. If you go back to the second, we had 3.2, let's call it 3.3 million shares. So a good 25% light as we've come back up into these highs. What could we do? What would you want to do? Could it fail right here? The answer is yes. I would like the odds a lot more at 312. This continues to be a rather weak sector, moved along by some, and I suspect a lot of politics involved in this. You got the very big surprise of BIIB coming out with results long before anybody else does. My guess is that there were probably more than a little politics involved in that one, and then some phony rumors on it. Normally these things, have kind of a life, a short half-life, if you want to put it that way. And of course, in Biogen, you've seen that. You get the huge spike. You do have kind of a pullback in lighter volume. Not saying that the drug isn't good or anything else. I'm just suspecting right now that there is a lot of need to try to distribute as much stock as possible. And if you got to make a phone call in your Goldman Sachs, maybe some other one, I'm hallucinating here, but you make a phone call and go, yeah, what would be nice is if, you had a bunch of calls on the IBB Senator. Maybe you call on over somewhere else and they get that approval, maybe on Friday. Wouldn't that be nice? Of course, you can't be prosecuted for insider trading, of course, if you're a senator or congressman. I hallucinate these things just because they come out of the woods so many times that I think you'd have to be anything. If you're not jaded now, you will never be, let me put it that way. But big pop, and then you find out maybe the story isn't quite what they said it was in Biogen. Maybe there are not 3 companies after them. Maybe one company's kind of talked to them. The story becomes a little bit less. But again, for me, what I would want in the IBB is for this thing to get back up to this gap down where this all started now. So, would it take more than a day or two? Probably you get back up to this gap down that happened on the 7th of January, 3.3 million shares. It's a nice big gap out there. The volume wasn't that tremendous, but it started this whole move down. You did have a test of the low, but you never actually pierced the low. It was about 500,000 shares light. This was right around the low for the British exit. If you remember, I was saying this one looked like it was bottoming out. We bought the calls on the IBB in the daily newsletter. And I think it was a Monday we bought the calls for that Friday, and it had a nice run. Didn't go longer than that because it was very unclear how a lot of these things would work out. Just that we were probably in for a fairly good bounce in this. That we've gotten up to 299 is kind of interesting. But my guess is there's probably a lot of people shorting this market, shorting individual stocks like this. I still suspect that we have one big kind of pop left in this market. And if it's what I think it is, it'll probably be like an intraday thing where we get a little pop, it goes up to the highs, it sells off that day, and you get some nice little tombstone dojis standing up here at the highs. But to me, the bet would be that this thing moves up even another 10 points on light volume to that 310. And that's where you find the supply line coming back in this thing like a monster. This thing should have pulled back at the 290 level. It did not. It has continued up. You know, you had a couple of days with okay volume, but not a great deal. You've got a little bit of a pullback out here today. The IBB is, in fact, I think we in the daily newsletter went for the spike. These stocks that tend to be horrifically shorted tend to have real big intraday ones. And I can't remember if it was in the daily newsletter, but we did one intraday spike and shorted it in the IBB and did well on it. I think it had to be this 366, but intraday it went from the low, went to the high, next day it just falls, and you get light volume, and that's kind of what we're looking at. In fact, let's go back and look at that one. This is kind of a good example out here, this September 17th high. You're kind of looking for that. You had like 3 days, you get a spike out here. Volume isn't all that exciting. It's 2.2 million shares, but you give maybe half the top of it back. The next day you pull back a little bit, and then the next day it really starts seeing the selling come back in, and that's probably what I'm looking for in the IBB. Hopefully that gives Tammy in the den what she was looking for. Let's see what else out here. What else? Let me take a look here. Just checking on some other emails out here. And of course, we're off half a point on the S&P cash. As I said, I am as all cash as a person can be in long-term and short-term. Don't see a whole lot. Let's go back to some of the stocks that did have earnings that we haven't had a chance to get to. I'll try to race through them for the end of the day. However you pronounce this, Abel, Marl, blah, blah, ALB. Eventually somebody will tell me how to pronounce it. This one is kind of the pattern that you want to see out here for a double repo pattern. This is not the cleanest one. It's not a textbook one. But it does kind of show you how these things tend to work. And that is that they'll climb this 3x3 displaced moving average back down the other side. You get the close under, you get the close over, and then guess what? Next close under, you just ride this thing back down. My guess is this is headed to 75. AVG, didn't see how this thing reported. I think it's getting bought out anyway. Denny's. Coming back to its gap. I kind of touched it today. What do we have for volume? 1.4, 800,000. 1.4 tested it with 700,000 so far today. So you're probably finding some level of support in the low 10s in Denny. EZPW. This was a big trader in the den a couple of years back. Had a test of the low. Did so on slightly lighter volume. Did not pierce the low, so I couldn't have bought it. This one also is one of these stocks that you have to watch very carefully. One more closed below the 3x3 displaced moving average, and I think you have a ALB pattern setting up. Papa Murphy's, we talked about pizza doing very well yesterday. Papa Murphy's, I've never bought anything from them. I've got a friend that loves buying their pizzas. I think because he never knows when anybody's ever in his family's going to show up for dinner. So they buy the pizza, they put it in the refrigerator, and they wait until everybody comes home. And once they do, they put it in the oven, but it's all ready to go and just made fresh for them. Not doing well out here. Certainly not Domino's or Papa John's. Down on heavy volume.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah. Anyway, Papa Murphy's, FRSH. First Solar. Another stock heavily shorted, had a big move down, and I think you can say everything about it. As I've said before, nothing like buying the solar industry where electricity costs 4 times the amount, and that's with 0 interest rates. We can only imagine what it's going to be. I continue to see very interesting ideas for solar. They talk about solar roadways. Everybody's figured out these are all pie-in-the-sky things. It makes me think of George Soros's big comment, which is all of finance, the history of finance is lies and deceits. Your job is to get on why it's being propagated and get it off before it's discovered. All these solar companies were at the beginning nothing but a giant scam to get cash into political funds in the 2008 election cycle, getting pretty much long in the tooth out here to figure out that even if you have a very good solar cell that's maybe 20% or 22% efficient, that these things are not going to last that long. A lot of them have 25-year warranties, but the question is that company going to be in business in 25 years? And the answer is no. They're going to go bankrupt. That'll be it. They'll sell all their assets to somebody else. You know, getting in on the ground floor is very interesting. When it makes monetary sense, I'll be wearing a suit of solar cells every day, so I don't have to pay the man the bill. But right now, guess what? Probably the best article ever on solar stocks was in The Economist, where it made one critical argument. That argument, of course, was that if you have solar cells, you still have to store the electricity so you can use it at night. And, of course, there's no viable way of doing it that isn't at least 8 times more expensive than regular natural gas-powered electricity. So you're better off actually having solar cells and, of course, buying a huge power plant to run at night. Since you're already buying the power plant and it can run during the day, does it really make any sense to have solar cells? That was their argument. I think it holds up today. And my guess is, unless we see something bust the 30% efficiency level, some kind of storage for the nighttime that is affordable and not just me paying for your solar cell system, i.e. making a right out of owning solar cells that your neighbor has to pay for, is an interesting idea. I wish they would have put just 10% of this money into actual finding a real solution to this instead of something else. And what else do you have out here? That's kind of it. I'm kind of getting to the end of the day anyway. Hey, tomorrow, guess what? Tomorrow we're going to be doing a special Tech Insider Hour. If you want me to cover something on a broad brush or maybe investigate it, or you think you have something that has more than one day legs out here, I know we have a lot of day traders, but I like to look at kind of the bigger picture out here. And we're going to cover that tomorrow in a special Tech Insider Hour. If you have any of that stuff, make sure and give me an email at path@tfnn.com. We'll be glad to bring it up and talk about it a little bit more. That's tomorrow. A very special Tech Insider Hour tomorrow. See ya tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.